But first, ahead of the budget tomorrow night, where I argued this morning on switzer.com.au that the Treasurer, Scott Morrison, had to do a Harry Houdini tomorrow night to pull off a budget that will escape criticism. One man who is bound to have criticisms in advance is his opposite number, Labor's Shadow Treasurer, Chris Bowen. Mr Bowen, thanks for joining us.
Great pleasure, Peter.
Chris, what is the big issue that you're worried about in the releases ahead of the budget?
Well, I want to see a budget which is good for Australia, and we'll back those parts which are good for Australia and good for hard-working Australians. I'm worried to see a budget which protects our AAA credit rating going forward. The Treasurer has had a clear warning from Moody's recently that he needs to have revenue measures as well as spending measures. I've been saying that for 2 years. They're both Liberal Treasurers, Joe Hockey and Scott Morrison, have denied that reality. Tomorrow is a chance to accept the reality. I doubt we'll see that, but we'll see. Also a budget which properly funds schools and hospitals. Now, schools are a great investment in our future, an investment in our future productivity, an investment in our future economy. And if Malcolm Turnbull and Scott Morrison think that schools are currently adequately funded, they're just plain wrong.
Well, you know, our government spending as a percentage of GDP is at 25.9%, which is a historic high, even compared to the 80s. Now, you'd have to admit, Chris, that former Labor treasurers also contributed to the size of that spending. You know, are you guys going to be negative on the government if they cut back on spending?
Well, there have been spending cuts in the last budgets which we've supported where they passed the test. Now, you're right to point out that spending is running at a very high level historically. It's running at levels as high as the GFC. Labor did step in and act and avoided recession. We make no apologies for that. It was the right thing to do. But this government is running spending at the same level. And just a couple of weeks ago, you had Scott Morrison in that 47-minute disaster at the National Press Club say, oh, we've saved 80 billion, but we've spent 70 billion. Nobody forced them to spend that money. They were government decisions that Scott Morrison and Joe Hockey have made. And we know that even since the last MyEFO, this government has been spending extra money, not offset, not paid for. So we've been announcing our own measures. We'll continue to do that. And tomorrow night and in Bill Supply on Thursday night and beyond, we'll accept and support sensible measures. Regardless of whether they're government or Labor measures, we'll accept and support sensible measures, but we'll oppose measures which hit the wrong people in the wrong way.
So therefore, some of the policy initiatives put forward tomorrow night, say around superannuation, in capital gains and things like that, if you guys don't like them, you won't support them. So effectively, they won't become policy, they'll just simply become election promises.
Well, the whole budget is election promises, Peter. That's the reality. The government, through Malcolm Turnbull's pretty cynical manipulation of the timetable, has made this an election policy launch. This is not a proper budget in terms of well thought out policies for Australia's future. This will be an election policy launch. Now, superannuation, we've led the debate. You raised superannuation. We announced our policy last April. Scott Morrison personally railed against those policies, said it was a grab and attack on retirement incomes. Tomorrow, he's going to do the same, or something very similar. He'll be adopting Labor's policy. Well, we'll welcome that. We'll support the government where they adopt Labor's policies. On other measures, we reserve the right to have a good look at them.
Will you oppose a cut in the company tax rate?
Well, I don't think that a cut for the company tax rate for Australia's largest companies is a priority at the moment. We'd all like to see tax lower rather than higher, but when you've got the AAA credit rating under pressure, you've got the government cutting school and the health funding. You've got the government in the past talking about cutting the age pension, for example. All these pressures on the budget and the deficit having been doubled. Now is not the time, in my view, to prioritise a cut in the corporate tax rate, and we'll respond accordingly.
Would you support the idea of raising the tax threshold on the 80,000 tax bracket?
Well, I want to see the detail. I'm not going to give the government any blank cheques on any personal income tax measures. I want to see what is involved. I want to see the impact on the budget bottom line, and I want to see what it means to wage earners. We've seen sort of speculation about tax cuts which are less than a milkshake, but which could still be very expensive for the budget. I want to see it, and our Expenditure Review Committee of the Shadow Cabinet will make an appropriate determination.
What about the suggestion that the Treasury is going to run with an economic growth number of 2.75% rather than the 3.5% that was predicted in the last budget? Would you think that's pretty close to the mark, 2.75%?
Well, again, I'd want to see the figures and I'd want to see the justification. As you know, the government was boasting as late as today about economic growth at 3%. I want to see it. It's an opportunity for me to remind you, Peter, that of my policy in the budget that I deliver. The growth forecast will be done by the Parliamentary Budget Office, arm's length from the government of the day. I won't be picking a figure out of the air. It'll be done independently by the Parliamentary Budget Office, and that'll then feed into our budget forecasts and parameters.
What about transition to retirement pensions? Would you, if you're in his position, get rid of that?
Again, Peter, we've announced our high-income super policy. We're not proposing any changes there. If they're proposing changes, we'll look at them. We will look at them, and we'll look at the package for superannuation. I've said repeatedly that low-income earners don't get anywhere near enough of a tax concession under this government. This government has abolished the low-income superannuation contribution from 2017 onwards. I hope they rethink that. I hope they revisit that because we want to see people who are working hard on lower incomes get a little bit of tax support for their retirement. We want to see them assisted in getting off the full-age pension. This government thinks it's okay that they get no support. Anybody on a low income gets no support for their retirement through superannuation, through a tax concession. I don't think that's fair or reasonable. I'll look at the entire package again, and the Shadow Cabinet will reach a conclusion.
Do you like the idea that they might extend the Joe Hockey $20,000 instant tax write-off for small businesses buying equipment and whatever?
Well, that of course was permanent under us when we were in office. It was a permanent arrangement. Joe Hockey made it a temporary arrangement, big noted himself and said how wonderful it was, but in the fine print it was just a temporary measure. If the government wants to make it permanent, again, well, I'll look at it in good faith. I always thought it was curious that it was only ever a temporary measure under Joe Hockey's arrangement.
But Chris, correct me if I'm wrong, but your amount wasn't 20,000, it was a bit smaller, wasn't it?
That is true, but it was a permanent arrangement under us. And we, of course, we took it from $1,000, as I recall, to $6,500, then to $10,000, but made it permanent.
Okay. So if you were in Scott Morrison's position, would you be out there saying that you're out there to try and create growth and jobs? Is that the most important thing this budget needs to achieve?
Yes, but I'd be doing more than talking about it. I mean, Scott Morrison is pretty clever at the three-word slogans, but talking about it isn't delivering it. Saying that we need an economy in transition, assisting economy in a transition, jobs and growth. I mean, you know, he's got one volume and one speed, this bloke, and he just thinks talking about it, saying it repeatedly, makes it happen. Well, being Treasurer is not like that. Being Treasurer does require a lot more imagination than that. More importantly, being Treasurer requires having the policy settings to support that. And, you know, this guy has tried everything under the sun. It was corporate tax cuts going to deliver jobs and growth, increasing GST was going to deliver jobs and growth, big personal income tax cuts funded by a GST increase were going to deliver the jobs and growth, getting rid of the excesses in negative gearing was going to deliver jobs and growth, state income taxes were going to deliver jobs and growth at one point. All these ideas that he's tried and then had to walk away from. Labor, by contrast, has announced our policies. We haven't had to step back from a single one of them because they've withstood scrutiny. Mr
Bowen, thanks for joining us. I look forward to your performance over the election campaign.
No doubt I'll be back on chatting to you, Peter. No problem at all.
OK, mate. Thank you. After the break, Paul Rickard and Simon Bowen will have a look at the stock market over April and whether we should be afraid of the old sell in May and go away.